All right, today is the 25th of September 2024, and we've got about 15 minutes before the New York Open. So let's get to the charts like we usually do. All right. Um, okay, so this is the daily. Um, Yesterday we anticipated a push up above 26 to reach 2650, and we did. So we reached 2650, and we've gone a lot higher than that as well. Next stop is 2700. That's about 400, roughly about 400 pips from current price. Okay. So right now on the daily time frame, there is no daily support resistance levels because candles are just pushing up, right? We have daily candles just pushing up. We had a bit of a pullback last week to the 2550 area, and we created daily support around 2559, and now we're pushing up again. Okay, so we've been pushing up for the last 1, 2, 3, 4, 5 days. We've been pushing up since mid last week until today. We've been pushing up, and we could head further up, or we could push down. I said this yesterday as well. There is no information to the left, so whatever that we do here is just assumptions. There is absolutely nothing. We're at all-time highs. I personally hate trading at all-time highs because price is just pushing up into unknown territory. There's nothing to the left. We don't know whether the price is going to stop here, pause here, pull back here, pull back 50 pips, pull back 500 pips. We have no information. We have no idea what's going to happen on the higher time frames, on the monthly, weekly, daily. There is, and even on the 4 hours, there is no information. Below the 4 hour time frame, maybe there's a little bit of information, but that's kind of, that's not very reliable information below the 4 hour time frame, at least for zones to trade from. Let's go to our trading chart. Um, and as I said, I don't use the weekly or daily time frame in decision making for session trading, right? Absolutely, I don't use weekly and daily at all, right? I really don't care what's happening on the weekly. I don't care what's happening on the monthly, the weekly, or the daily when it comes to trading the session, because I'm trading in a 2 to 3 hour window. That's it. That's my trading window. 2 to 3 hours of the New York Open. I'm looking for volume to get me into a trade and get a winning trade, or if I get a losing trade, then I want to manage risk. So that's all happening within a 2 to 3 hour window. So I don't care at all what's happening on the weekly or daily, because I just want to trade within those few hours, about 2 to 3 hours. So I'm looking at the H4 time frame. I'm looking at zones on the H4 time frame to take a possible trade. So let's go straight to the H4. Let's clean up our chart and see what we have here. Let's get rid of all of that. Let's get rid of this, get rid of this. Yeah, price is very far from me, 500 pips away. Let's leave that. This is what we reviewed yesterday. Um, yeah, let's get rid of all this. I'll redo these. Um, Started a clean chart so that for those who don't know how to draw supply demand zones can learn here how to draw supply demand zones. So okay, so we have a clean chart. Okay, we have a clean chart, and we have four ugly H4 candles, very ugly H4 candles, because they're all dojis, right? Similar, all are dojis, like almost dojis. That's a doji, that's a doji, that's a doji. There's nothing in the last, the last 16 hours. Nothing's happened in the last 16 hours. We've just been ranging in about 180 pip range, just pushing up and down in 180 pip range. Actually, about a 125, 130 pip range. We've just been pushing up and down. So it's just ugly, right? So now, but we do have a rally here and a drop here. So there is some sort of supply somewhere here in this wick. There is also H4 resistance there, right? Right at that, right there uh, is H4 resistance. We have a bullish candle and then a bearish candle. The open price of this bearish candle is H4 resistance. Okay, so let's get rid of that. Let's look for that supply. So let's just mark that wick for now. Roughly, let's mark the wick for now, and on the H4 time frame, we'll go down to the H1 time frame to fine tune this to where the rally base drop is. Okay, here on the H4 for in terms of demand, uh, there is nothing. There is a um, there is something there. There's something there. There's a rally, a base, and a bit of a rally there that went up. So there is something there. Let's just mark that as well. Again, it's very ugly. We'll go down to the H1 to fine tune all of these zones. Okay. Then further down, we've got that, right? We've got all of that's a base candle. So that's a rally. Then we've got base in candles here, base, and we got a rally, right? So all of that up to that candle, all of these 1, 2, 3, 4, 5, 6 candles are part of the base, right? So that's the leg in, this is the base, and that's the leg out. Okay, that's the big push up started here, and we have almost like two same color candles there, or one big H4 candle there. In that big H4 candle, you'll easily find two H1 bull candles. If you go down, yeah, you'll easily find two H1 bull candles there. So that's fine. That is a rally, a base, and a rally. Okay, rally, base, rally. That's a demand zone. Okay, right. So now on we've got these are ideally the zones for the New York session. That's about 200, 300 pips away. Let's come down. Maybe we'll draw one more just to be safe. Let's draw one more. We've got a rally there. We've got a base here, and we've got a rally there. So yeah, we got a drop. Sorry, we got a drop here, and then a rally here. So here, under here, we've got another zone somewhere there. Um, yeah, and that is a part of all of that, so that's fine. Yeah, so that's a part of all these candles are a part of that. So this is the leg in, these are the base in candles, and that's the leg out. So there is no base right here, but this would be the start of the move. This candle here would be the start of the move, so I've drawn it to the base there. We'll refine all of these on the H1 time frame. Okay, so that is, yeah, 363, about 370 pips away. Let's quickly look at news. Do we have any news today? Okay, we've got no news today. Absolutely no news today. So that's what Forex Factory, the red news folders look like. On Wednesday, there is nothing. Yesterday we had something, didn't move price. None of these are going to move price much, okay? None of these news events are going to move price much. Maybe tomorrow unemployment claims might move price a little bit. The rest are not going to do shit. So, so today we've got absolutely no news. So it's just going to be another regular trading day. Let's not worry about this at all. Let's refine these zones. Let's look at the supply first. So that is supply on the H4 time frame. I'll change that label, but let's just 1 second. I want to see if everything is fine here. Yeah, okay. So let's go down to the H1 here. All right. So on the H1, we have a rally and a drop. A little bit of a base there. Looks really, there's nothing there. There is no base there. It's just a rally and a complete drop. We might have to go down to the M30 to see if we can refine this a little bit. Okay, so maybe there. Um, yeah, that's the best. It's really ugly. Um, yeah, there's nothing even on the M15. Supply is so ugly. That M5 candle there, M15 that, there's nothing, right? Um, just want to go down to the M1 and see what it looks like. Okay, so so if I were to draw this on the H1, I would have to draw it right there. It's just a sliver of a zone. So that's that that doesn't give me much. That's nothing there. I don't have any. I rather not draw a zone if it was going to be that thin. So I have to. I'm forced to go down to the M30 to find a basin candle, and that's the only one that I can find with a bit of a wick. So rally and a base and a drop. So that will have to do for now. So let's put in those numbers. High is 70.52, 476, 476, 70.52. Just copy this. Okay. Even though it's ugly, that's the supply that we have for the New York session, right? Very ugly. On the H4, yeah, there is a wick there. I mean, there is a push down, so we have to consider that as H4 supply, okay? Because that's on the H4 time frame. It looks like a rejection, and it looks like some sort of a rally and a drop. So on the H4 time frame, we're going to consider that as H4 supply. Now, let's look at demand. Our closest demand zone is that basin candle here. So this low and the close 699, 699. Let's go down to the H1. Yeah, on the H1, little bit more clearer. We have that, and the candle wicked into that. So yeah, a little bit better on the H1, right? Rally, base, rally. And we wicked into that, and we are reacting off of that right now, right? So the last 1, 2, 3, 4, 5 hours, price has been reacting. We're just about for getting to 8 a.m. New York time. So the last 5 hours, price 3, 4, 5, actually 6 hours, 7 hours, we've been reacting at this zone for the last 7 hours, right? So we're going to consider that as our supply. We're going to mark this as H1 demand, because that's all we have. We don't have really, we don't have clean H4 demand here. 411, 989, 411, 989. Okay, now let's go down further here. This is cleaner, rally, very clean, base, rally. So the close there is 554, 268. 554, 268. Okay, and here also they're going to have to probably go down to the H1 in that area. Yeah, we had drawn this earlier, so that, yeah, I mean, we could come further down here. That would be right. What does it look like on the H4? Just wicks. No, we'll take that bit as well. So rally, base, rally. Okay, we'll take that in. That already wicked into it and pushed up, but the push up was the one that took up this. So let's consider that. So that open there, 164 and 392. 164,392. Okay, right. Those are our zones. Now, Now, out of these, which is let's figure out what our high liquidity zones are, because those are the ones that I want to trade from. Those are my ideal areas that I want to. Okay, so New York is just open. Sorry about that. Let's look at our high liquidity zones. Okay, let's look at the one above. Did this drop take out anything here? There was demand there. There was demand here. It did take out. So this drop here took out this demand zone. Okay, this was demand. This used to be demand. Um, okay, this used to be, yeah, there. Rally, base, rally, and this drop took out. So that we're going to mark as a um, high liquidity zone. Um, okay, right. Get rid of that. Um, did this demand take out anything? Nothing. There's nothing on the left for it to have to take out anything, right? There's nothing on the left. Um, but it's the one that we are reacting to, and it's also around 2650. So we're going to pay attention to that. Even though we're not going to mark it as a high liquidity zone, I'm going to pay attention to that zone because it's right at 2650, which is a psychological round number, and price is very close to that right now for a push up to retest this high. This one, did this zone H4 zone take out anything to the left? Um, yeah, there was demand here. This move up took out that, right? So that is a high liquidity zone. So this move up took out that supply. So yesterday we had drawn supply like this. This was the supply that we had, and this move up took out that. So this becomes a high liquidity zone. I hope that's clear. Okay. And the bottom one also, yes, took out that, so that's also a high liquidity zone. Okay, right, that's what we've got. Um, okay, let me just quickly post this on the group. Right. Um, hmm. So on the daily, there is um, absolutely no daily SR. The closest one is there, about 780 pips away. So let's just ignore that. If you look here, we have touched the EMA, so price is very likely to push up, continue to push up here. Um, Sorry. So 109 pips. We're already pushing up. Okay, right. Now let's see where we are heading to. Where, if there is a trade for today, where could we possibly take a low risk, high reward, high probability trade setup? Um, price did come here. This zone was created in the New York session yesterday, just after about 4 hours, 4.5 hours after New York open. Um, we grabbed the liquidity. There's a liquidity wick right there. That candle is important. But in London session, we already came there. Price did come to that candle in the London session, and we're pushing up. Um, and we've created now, we have this as well, just above. Drop. Yeah, we have a let's look at the 30-minute time frame and see what it looks like. This candle is already priced. That was a liquidity grab, but price already came to that candle. If this happened here, great, we could have taken a trade, but it's already done it now. Got to break above, we've broken above these highs. So price should head up, We need a candle close above this resistance to head up here. It's really ugly. I'm struggling to find demand here because it's all just basing, just ugly. 1, 2, 3, 4, 5, 6, 6 1-hour candles, 7 including that, just in a row. There's no leg out. We consider this a leg out, and that the base, and that a drop. Yeah, that's the only way to draw it. The open 57, 57 close. Yeah, 57. And the low here is 51.21. Hmm. Let's look at the so that's a liquidity wick from this green area. That's one from this area. These two candles are important. I want to see if price this broke, this low broke, this low, this low broke, this low. Ideal candle. Yeah. London session candle 532121. 121 532121. Okay, price has already touched this area perfectly. So it came to the mid of the candle and went 62 pips and touched this 2659.50 area. Now it's reacting to 2659. I want to see if price comes deeper to this 2652 area, 265250, 265225. If it comes deeper, to see if you get a reaction to go up again. It might not, but it's a stop loss of 20 pips. Yeah. That's the candle. That's the M15 candle. Perfect candle. Grab liquidity. Price did not come to the. See if there was demand there. Yeah, it did come. Perfectly came to that. Touched that demand zone. Went up 75 pips. That was the ideal trade. It's already done it. I don't know whether it's going to do that again. It's even if it does it again, it might not be a good trade to take. There was a demand rally, a drop base rally there, and price came to that as well. That demand zone and pushed up again another 60 pips. So this area is kind of consumed right now. Um, it's not very smart to try to take a um, another trade from that same area again. Um, yeah, I don't know. I might not get a trade today unless price goes up here. We've got to see the reaction. What price does up here? But that has no top wick, so that it's very likely that price is going to take out that high there when it gets up. There's no top wick on the M15 there, even on the M30 and even on the H1. There is nothing there, so that high is going to get taken out quite easily. Um, yeah, right down from H1 to M5, there is nothing. There is no top wick. Um, there's no reason, I think, to look at. Yeah, same on the M1. There is nothing. So that high is this high of this candle, which is the start of the 30-minute candle. That's going to get taken out. That high. I would have liked to see a pullback here. Oh, well, I like to see a price come back, pull back somewhere here below these two lows, closer to this. That's a very that stop loss is I don't like that the 40. I don't like a 40 pip stop loss. Might not just get a pullback here because price has already reached this 7 RR level of this trade, right? So that's the entry somewhere there, that M5 demand zone. Um, Drop base rally. This is the open of the 15-minute candle, 10:15. That's a London trade. Yeah. So this candle was the entry candle. Anywhere below this line, anywhere below 265327, that is the mid level of the fib. Anywhere below that was entry. So you could have, if I was trading the London session, could have traded on this candle, this, or even this. 1, 2, 3, 4, 5 minute candles to get in on the trade on, right? Anywhere below this 150% level of the fib. So deeper you go, the higher the RR. So now it's done that. The trade has worked. We've gone hit 7 RR on that trade, 2659.50. So there is no reason for it to come back down again unless it comes back down to go further down to maybe the 2650 and to the 2650 level, and probably down to this EMA right here, or further deeper down, in deeper below this EMA, grab liquidity below these zones and then go up. um, yeah, so right now there is nothing and we are in the middle. So it's either a trade below this. Let's look at the 15-minute. Yeah, it's either trade below this wick. So let me just put a green. One second. This was the. This was one. This was one. Two. Two. So this was. So either trade below this open price of this, or we wait for price to. We wait for a few candles to print and see what price is going to do over the next hour and a half. Right. So let me just put a 55.67, 55.67. Price needs to come below this for me to be interested. It needs to come below this for me to be interested in taking a trade. That's a quite a big stop loss, 44. So I might want it to come deeper still to be able to get a trade. So I might have to wait for a 15-minute candle to close. If price decides to come down, I might need to wait for a 15-minute candle to close before I decide to do anything, because that stop loss as it is too much for me. 44 pips is way too much. Um, yeah, yeah, that's way too much. So I got to wait for price to come deeper. Uh, it might. We are rejecting that area. We are rejecting this fib. I've said this, there's a reason why these fib levels are where they are. Price does react to them time and time again if you draw them correctly. So we are reacting to, there is a rejection there, clear rejection. So if you go down to the 5-minute also, there's a clear rejection. We've created resistance right at that 265950, and price is reacting to it and pushing down. So if you do come further down, I want to see an M15 candle. So here's what I'm looking for. I want to see an M15 candle uh, break another M15 low and come further down here. So this M15 candle broke this low. This was just 2 candles before the NY open. So that's a good sign. That's fine, and that's one of the candles. I need one more. I need one more of those liquidity grabs and wait for the candle to close and then take a possible trade. If price comes down here, then I'll have a tighter stop loss from about here. Yeah, it'll be about 30, 35, 36 pips stop loss to hopefully run up again another 40, 50, 60 pips and go all the way up there. That'll be 100, or maybe even we go up here 175 pips. So that's the setup I'm looking for. Yeah, so this move up took out these highs, right? Took out all these highs, that high, right? And all these highs. So we took out all of these highs at this level, right? Including that one. And then we took out that high and we took out that high. That's the highest high in this range, right? We took out by this move up. So that is important. This wick, this area is important. Um, this area is important. On the edge, yeah, it is important. So I'm going to kind of bring this down as close as 566, 5.66. Okay, right, that's better. So yeah, that's the area that I'm looking to see if price can come down. So for another M15 candle to break another low, just like this one broke this previous low, for either this candle or the next candle maybe to break a low, come down, and then maybe get an opportunity to go up. But I don't know if that's going to happen. But let's see. We are rejecting. So let's just draw support resistance levels so that for those who don't know how to draw them, can learn how to draw them as well. Okay, let's draw them on the M15. Start here. Let's go all the way here. Change the color to gray. Okay. So we have M15 resistance there, there. 163. Eight one nine. Okay, that's about right. Let's look at, yeah, that's correct. That's on the M30. It's fine. Looks clear. H1 also correct. H4 also roughly correct. H4 is crap. Yeah, H4 candle has closed below that, closed above, closed below, and now we're trying to close above again. Okay, so yeah, so it's kind of correct on the H4 as well. That resistance level is Vista is correct on the H4. Is correct on the H1. So we have candles trying. This couldn't get above. It pulled back a little bit here, and the next one closed above. Then immediately closed back below. Then it sat on here. Then it tried. Then it kind of sat here all the way, kind of pulled back, grabbed liquidity below the this resistance level, went up, came down, closed below, continued below, came up again tried, it couldn't all this time, and now it's trying again. So that's perfect resistance right there. It's same on the M30. Yeah, it's fine on the M30 as well, and fine on the M15 as well. So when you draw, so keep this in mind, if you draw the resistance correctly, it'll look correct on most time frames that you use to trade in the session, at least on 3 time frames, at least, right? So this works on H4, H1, M30, M15, and even M5, right? So it doesn't have to be the same resistance doesn't have to go on all time frames, but if you do draw them correctly like this, you will see them, you'll see price using it as a base to either trade above it or trade below it. Okay, that's the whole point of support resistance. Like you can see what's happening now on the M5. We pushed above it, and again now the M5 candle is pushing below. If you go down even to the M1, you'll see price came, it rejected the gray area, pushed back, came here, closed below, then went down, and again it's pushing from there. Okay, so we want to see if price can come further down here. And the M5 also perfect. See, we've got reactions here, we've got a reaction there, we've got a reaction here, pushing up, then all of this happening, then you go down there. 5 minute is not very important, but if you draw them correctly, you'll see how beautifully price reacts to these zones. See, they're reacting there, here. This is when the open of the day. That was the open, and even at the open, right at the open, it reacted perfectly to it, all the way during the Asian session, and then in the London as well, right? And now we are pushing. You can see this M5 candle pushing above it again. So we may continue up without coming down, and if that's the case, then I don't get a trade, because price just goes up and then continues, just like what happened yesterday, right? That's exactly what happened yesterday. Price just refused to come down to give us a trade, went up, continued up, and went all the way up since from here on. So that was the big push. Yeah, 430 pips straight from this big M15 candle. We pushed up 400, and price refused to give us uh, a buy opportunity to come further down to get us in on to get me in on a trade. So I did take a trade here. I took it live. You guys saw that was about I think a 2 RR trade, or I think a 1.5 RR trade here, with about I think a 20 pip stop loss, 25 pip stop loss, and it ran about 40, 45, 50 pips. But I took a very small entry because price didn't come deep enough to get another entry. But that was a 2 RR, 1.8 or 2 RR trade there. Apart from that, there was nothing. I didn't do anything else. So that's all what I've done this week, 0.48%. And we have closed above it. We've closed above this support. So now it came down, grabbed liquidity, we closed above it. So we should continue higher now, right? This is a 30-minute candle close. It's closed above the resistance. We should continue higher. The next resistance area, the minor resistance area, is around here, but it's you can't see it, not too clear on the yeah, let's just go down to the 15-minute and see what it looks like. That's there. Right, roughly there. Okay, it's very small. It's nothing. It's just we've already closed at it, so we should just continue. But that's minor resistance there. So if you go to the M30, you'll kind of see it as well there. If you go to the H1, also you'll see a bit of it there. But they're very close to each other. So price has closed at it. We should continue up high without a problem now. Price should just continue high all the way there without pulling back. Yeah, I'll just keep this on here so for you guys who wanna. Yeah, so that open is 59.50 and 985. 985, 59.50. Okay, so that's what it looks like. That's what it looks like on the H1. You can see price reacted to it there on the H1, closed above, closed below, reacted to it, couldn't closed above, stayed above, went above, reacted nicely here, closed below, reacted here, and now it's pushing up again. You go down to the M30, you'll see how price came up here, reacted here, here, all the way go down to the M15. Same thing, you can see how price reacted here, here, here. So, as I said, if you draw them correctly, they will match up on at least 3 time frames. At least 3 time frames, right? If you go down to the M5, you'll see the same thing. Clear reaction to that resistance, clear reaction, here, here, all the way here, all the way. If you go down to the M1, same thing, you'll see price closed above, closed below, closed above, closed below. Here it's reacting here. So that's what I meant. Okay, so now price should since we've closed above this and price closed at that resistance and above the above this fib level here. So let me just we've closed above this candle. This 15-minute candle has closed above 265,950. So price should just continue higher now. It should continue higher, maybe pull back a little bit to create a bottom wick, and then continue higher, right? And we should maybe just go all the way up there, maybe another 100 pips easily. Yeah, it's unfortunate the price did not come down, because that's so what I look for is I look for 2 liquidity grabs on M15. 2. So what I mean by liquidity, let me rephrase it. Not liquidity grabs, sorry. Because a liquidity grab can be just once. I look for 2 M15 lows to be taken out. 2 M15 lows to be taken out during or close to my session. So this is a couple of candles before the time I started. Before the time I start, that's fine, right? Just a couple of candles before is two candles before the session starts, 2 to 3, even 3 candles before the session starts, 3 15-minute candles is fine. Nothing beyond that, right? Because beyond that, we are in dead volume territory, right? I said this yesterday. If you watch yesterday's stream, I explained what dead volume hours are, right? This is pre-NY. This is pre-NY. This is good. This is volume time, right? This is about 45 minutes before the New York Open. This is volume time, right? So this is fine. All of these three candles are fine. But be, before that is just ranging because it's neither London Open nor is it pre-NY, right? So those 1 to 2 hours, I ignore those candles. Those are not important. This candle is significant. Why? Because it's during the first 3 hours of the London session. This is important. This is an hour after London Open, right? Or just maybe 30 minutes after London Open, I think. This candle here, right? So this is important. This is important. All of these are not important. This is important. This wick is important. This wick is important. That wick is important, right? Those three are important. So you got to be able to identify which candles are important and which candles are not. There's a lot of noise on the chart, so you got to declutter the hours that are not really important. Okay, so this is a significant candle. So I wanted price. So this broke a low. I wanted one more low to be broken, price to come down, break another low, and then we move up. But that didn't happen. Price already moved up, and that may not happen. I don't know if price pulls back now, another 30-40 pips come down here before it goes up. If it does, great. I'll wait for an opportunity. Are we rejecting this area yet again? Yeah, so M5 rejected this resistance again. Rejected once, twice, three times. The third time now. If you go down to the M1, same. Close above, close below, close above, close below, close above, close below, right? So M5 is rejecting that area again. Um, so let's see if we can come down here to get a trade. Um, so I want price to come to either of these three wicks. Coming back to this wick would be the best, right? So that's that dark green area that you see there. That would be the best. I don't know if it will. If it comes there, great. I'd like to take a trade there. This has just about 28 pip stop loss. That would be great. Or this wick here, 17 pips. Or this wick here, which is even shorter, also about 17 pips. Okay. So this wick would be the best. 29 pip wick, if it can come there. Any one of these candles, this, or this. Because if it does come there, that means it's going to break another M15 low. And that's interesting. Then I will wait for the M15 candle to close before I decide to do anything. We got about almost 7 minutes for this M15 candle to close, so we just got to wait to see whether it's going to come down low, break this, and come further down. So this was the candle that was created during the New York session that price came down to. This candle here, right here. It's at the high. That's exactly where the green, the dark green box goes from the high to the low of that candle, right? That's not how I draw the zone, but I mean the zone was zone was drawn based on the H1 time frame, from the rally base rally, but coincidentally that M15 candle is exactly at the high of that and the low of that. So that was the candle, and it touched 2650. So it was a perfect candle, trading candle, and price came, to that candle. So if I were to draw that as a trading candle, um, The high 399,989. 399,989. Okay, so that was the candle. That's a liquidity grab um, for this massive move up. About 18, 19 pip liquidity grab and a candle that created this move up, right? Since from there we moved 180, 85, 100, not a big move, but a fairly decent move. 185 pips up from that candle. So price came back to that candle, right? That's that green box came back there in the London session and grabbed liquidity to go up again, but has been struggling, has not has not made much progress since it grabbed liquidity there at the mid level of the fib of that candle. We've moved about 85 pips. That's it. So previously that candle moved. Let's take it from the. Let's take it from here. That was the start of the move somewhere there. Yeah, we moved about 190 pips, 185 pips, but this time we just moved about 85 pips. The price came to the mid of that candle. We moved about 85 pips. So yeah, rejecting again from this. Now this resistance has turned support. First it was resistance. Now price is closing above it. So this resistance level turns support, and price is now reacting to it. If you go to the M1, yeah, we are pushing it, trying to push up from that level. 26 again, perfectly to the fib, right? 2658 fib, 2658, reacting exactly to it, and that fib falls exactly uh, in the middle of that resistance that we drew. That's how accurate these fib levels are. That's how accurate these fib levels are. There's a reason why I draw them the way I draw them. This is not the default fib. I've customized it. Watch my first video. I think on the first video and the second video since I started these live sessions. Um, I think the first three videos I showed exactly how to draw this fib. Go watch them if you're interested in learning how to draw this fib to find these levels, these numbers. How do you get these numbers, these levels, right? Look how price is reacting to that fib all the way. So you would have drawn it yesterday if you're trading these hours and waited for price to get there, and price did get there. This is the low risk, high reward, high probability setup. This one right here, 20 pips stop loss. So far 88 pips. Right? That's the reason for this fib, because this fib provides me the low risk, high reward, high probability setup. This fib. You got to get the settings right on the fib, and then you have to find the high liquidity zones, and then find the candle in the high liquidity zone to draw it correctly. That's the key. It's not difficult at all. It's very easy. Once you do this, you practice this like 25 times, and you'll be doing it very easily. Okay, what's this guy saying? Okay, we had a M15 candle close um, below here. We could now create a top wick and push down because we are reacting to this resistance right here. Let me get rid of this. Oh, let me just leave that there. Change the color. Yeah, we might create a top wick now and continue down. Just want to see if we have. Yeah, there's nothing. It's nothing, absolutely nothing, which is ranging. 35 pip range, which is ranging between this resistance and the support, just bouncing. This is the area that I'll be interested, somewhere down here. Now, this M15 candle has broken this low. Got to wait for this candle to close, but it has broken this low. So we had one break here and we have one break here, but this break here is way too high. I wanted price to come down here. I'm not going to be looking to take a trade anywhere in this. So like I always say, in this black area, I'm not trading. That's not my kind of trading. There's a lot of traders who take it. That's absolutely fine. If that works for you, uh, then that's absolutely fine. You should trade that way. For me, it doesn't work for how I look at trading. For my beliefs, for what I believe in trading, it doesn't work. It goes against my beliefs. So I trade at the extremes, up there, down here, only at the extremes. In between, nothing. So I don't care um, what price does, break of resistance, trying, I don't care or what it does and what information it gives me. If that information is within this area, then I'm not interested. I'm interested where what price action does down here or what price action does up here. That's the only areas that I'm interested in taking a trade, because I believe that those areas are where I will be able to find a low risk, high reward, high probability trading setup. So we close below this and we're trying to close above it again now. I think third time's a charm, right? So we tried once, twice, no, actually fourth time. Tried once, we tried twice, we tried three times. Maybe the fourth time's a charm. Maybe here we close and then we just continue up here. Maybe this is just a liquidity grab. Yeah, very possible a liquidity grab. Yeah, it is. It is. It is. It is. We are continuing up now. That was the M15 low that it needed to break to grab liquidity to continue high, and now we should go. Now we should just continue all the way up to this red zone and higher, maybe another 100. Maybe it's a 150, 150 pip move now coming. Um, yeah, that was the 1545. Yeah, this was it. We should go up. But I can't, even if it even if I know that there's a trade there and there's a right trade there, I will not take that trade. I can't take that trade because it doesn't fit within my, doesn't come down here. One second. I had it drawn up here, did I? Previously 57, yeah. That's where I've drawn it to. No, we didn't even come there, so no. And that's where I'd initially drawn the zone to, because I was, yeah, I've drawn it here. But price didn't even come down to that. If I took that green box, that's way, as a huge stop loss, 57, 58 pips. No way was I taking that. Um, close 566. Yeah. Yeah, we should head up. We should continue up now. 6 minutes for this candle to close. This should close a bullish candle, maybe below this resistance, and the next one continues. We should. I really hate trading when prices at all-time highs like this because there's really no structure, to the left. So if there was structure, if you if you go down here to this area, this was in July, right? There are H4 zones there. There's a zone there, there's a zone there, supply zone, there are demand zones down here, here, here. And you can see how price reacts to them. Reacted to this, reacted to that, okay, reacted to this zone here, came back, reacted to that, you know. And even when it came here, there was a little bit of structure here. There was some supply here, there was some demand here, which is reacted. And then after that, we just started climbing. 100 and almost a $200, yeah, $200 move, right? Right from about that. That was the last area. That was the after like from July to August. Since August, we've not been having much structure. Because price has been making all-time highs uh, since the first week of August. Just keeps going up, making all-time highs. Nothing to the left. That was better. That was better. This was a little okay, but since mid-August, September, there's nothing. Price is just making all-time highs. There's very little trading opportunities for unless you just keep buying. But then that doesn't fit my trade plan because I'm looking for that low-risk trade. Um, so we closed again. So this candle closed below it. 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 So for the last 1 hour now, this 1 hour candle has closed above this but below this. Um, so let's see if this 1 hour candle can break above. This is the start of the 1 hour candle right here. So in that 1 hour candle are four 15-minute candles. So one of those 15-minute candles needs to close above here. One of them. If one of them closes above this resistance, any one of those four, then we are continuing higher. But one needs to close above it, price to go up. For those who are here's an I think I had mentioned this earlier as well. Um, For those who are not consistently profitable and trying to trade on your phone, on your mobile, don't. Delete that app, that MetaTrader 5 or MetaTrader 4 or C-Trade app, delete it. TradingView app, delete it. Do not trade on your phone. All you can do is you can open and close trades. You can maybe kind of manage an ongoing trade, maybe you can do that, but you can't really do analysis. You need a trading chart, a proper trading chart to draw um, zones and kind of do analysis, right? So if you're struggling, if you notice that every time you try opening a trade on your phone, you kind of majority of the time you are losing. Majority of the time you're losing. Then just delete the app. Just delete the app so that you don't have that urge to look at your phone, to look at a chart on your phone. You shouldn't have the urge. You shouldn't. You shouldn't have the urge of looking at a price chart on a mobile phone. You shouldn't. Just to manage a current trade that you've taken, that's fine. But you shouldn't have the urge to look at a chart on a mobile phone to look for a trading opportunity. You should be doing that. You should be doing your prep work 20 minutes, 25 minutes, 15 minutes, or even 30 minutes before your session starts, before your trading hours, before your trading window commences. You should be looking at the chart. Do your analysis, draw your lines, your zones, your levels, and then wait for price to get to you. Calculate the correct risk before you take a trade so that you know what risk you're supposed to be taking, and then take a trade. So 9 minutes for this candle to close. This M15 candle rejected this support, closed at it. The next candle broke the high, created a bottom wick, broke the high. We are continuing higher now. Now, there is no reason at all, since price is now broken above this high. Also, an M5 candle is closed above, strong. M5 candle closed above this. Grab liquidity here. I showed that liquidity grab on the 1 minute candle. That was the candle. On the 5 minute also, you can see the price came down, grabbed liquidity from below the M15, previous M15 low, that M15 low. So that M15 low was 57.78. Grab liquidity below it and then straight up. So there is now price is not going to come there at all. So because we had one M15 low break, second M15 low break, and now we continue higher, and we're going all the way up there. So price didn't come to my area. That happens often. That's absolutely fine. Price didn't come to my area of interest to take a trade, and that's absolutely fine. And now we've got to wait for maybe in an hour, less than an hour, in about 50 minutes, the 4-hour candle is going to close, so probably wait for that. See where and how that candle closes, where it closes, how it closes, to see if you have another opportunity, and maybe then call it a day. There are less and less opportunities. The longer price stays above these levels, making all-time highs, there are lesser and lesser opportunities, to trade, because there are fewer zones. I mean, there's almost no supply, and there are fewer demand zones. Like prices doesn't need to pull down all the way here, 300, 400 pips to get a trade to go up. There's a lot of high time frame volume on the monthly, the weekly, the daily. We're pushing up on all these high time frames, monthly, weekly, daily. We're pushing up, so there's no reason for on the H4 time frame for price to pull back to this level. It would be nice if price did pull back to this area here below 2650, or at least to the 2650 area, but it didn't even need that. This H4 candle fell short of 2650, just there, a good 15, 16 pips short, because there is enough volume on the high time frames to keep pushing price up. Um, we are going up now all the way. We're going to break this high here. So this high is 70.22. We're going to break this high here. So that's about 70 pips from now, 69 pips from now. We're going to go break that high. um, these were the right candles. This was the right candle. That was the right candle. Unfortunately, these candles happened before the New York Open, so I couldn't make use of any of those candles because I usually don't trade the London session. I trade New York. The New York Open is my trading window. 2 to 3 hours of the New York Open is my trading window. So, but these were, I would have loved to see these candles, this candle or this candle, or even this candle in the New York session to take trades from, but they happened before. That happens, and it happens often. Yeah, so we've touched supply. We should push higher because there's just clean space here to the left. All of that above that is all just clean space. That's just 80, 90 pips of clean space for price to run through. Okay, so we're getting a small reaction at that supplies zone there, but we should close above this and we should create a bottom wick and then continue higher. And price reacted to these levels. See, 2658 perfectly reacted there. M5 on 2658, that M1 candle that I showed earlier, that was exactly at 2658, right at 2658. Grab liquidity, straight up 70 pips. I I do anticipate these trades. I do anticipate, and I have with quite certainty. I know if price reacts to these fib levels, if rejects these fib levels and close above them, I know where they're going. But even though I know that, I'm not going to take a trade there because a trade um, comprises or consists of three parts, not just where to take a trade, not just the entry, the stop loss, the entry, and the take profit. It's not just a lot of retail traders see, okay, so I know, so they think I know the trade price is going to trade above this, so let me just take a trade there. But where is the possible stop loss of this? Price can easily swing down here to this area, to this base, and grab liquidity. So 50 pip stop loss, 60 pip stop loss for a trade that's going to run 60 pips. That's a 1 hour trade. That's very average risk to reward. I don't trade average risk to reward. I want a high reward trade. Low risk, high reward, high probability. It's, to me, high reward matters a lot. That is why these sessions are named after them. Low risk, high reward, high probability setups. Um, those are the only trades that I'm looking for. If he had come down here, then yeah, any one of these levels to the mid level of this fib, great. I would have had like a 20 pip stop loss, 25 pip stop loss, and then we could have taken this trade up to this level. 115 pips here, and then we should go up here. That's 170 pips, right? We have taken that trade on a 25 pip stop loss, 150, 170 pips. That's fine. That makes sense. But price just didn't need to come because of the high time frame bullish volume that we have. Price didn't need to come lower to grab liquidity, just continued high. It didn't even touch the EMA, did not come down to grab liquidity from the EMA. It just traded above the fast moving average, which is there, the red line. So if you look at the, just touch that. We didn't come even to the middle of that. We didn't come anywhere close to this EMA. We just kept touching that, trading above it, touching it, and then we just continued straight up to this red area. Okay, so this candle is just closing, it's creating a range for the next candle to trade into, right? So it's creating this wick. The lower this, the bigger this wick gets, the better the range for price to create a small bottom wick and then continue through this range and continue higher. And that's what it's doing. That's how you read candles, right? That's what it's doing. So price is closed above this. In 20 seconds, price is going to close above this resistance. And now we're going up. And the reason also it's stopping there is because on the left, we have another resistance. Just draw that as well. Just there. Right, so that's that resistance there. Okay, 471, 426, 471, 426. Okay, so that's a resistance. So if you look on the M30, you'll find price tapped it, closed above it, sat right on it. The M30 candle sat there and continued up. If you look on the H1, you'll see it, price touched it, closed below, closed above, closed below. So M30, that makes sense, sat above it. Yeah, that makes sense there. Let's go down to the M15. Yeah, we touched it. We closed above it, closed back below, touched it, closed back below. We're rejecting there. We go down to the M5, we touched it. We closed below, we closed above, closed below. Price came, closed here, continued down. And now, yeah, closed. We wicked, we closed below. We're trying to push up again. So, as I said, if you draw the support resistance lines correctly, if you draw resistance or if you draw support correctly, it should make sense on at least three continuous time frames. Yeah, so now price, all price has done is has closed above this resistance, created a top wick for the next candle to trade, and price created a bottom wick, and we should continue higher. Yeah, that's the bottom wick there. Just a fairly small bottom wick, isn't it? Yeah, just a 8 pip wick. Where is that? 1615. Here. Yeah, 8 pip wick on the M1. Yeah, that's the wick. So that's the open of the candle. That's the wick, and we're pushing up. And we're gonna fill this wick. Wicks get filled when price is in momentum. So this wick, that's one way to say it, and the other way to understand it is that when price leaves a wick like this in momentum, it's a range for the next candle to trade. It's a range that the next candle needs to trade into, right? So it's going to trade into that range and then continue higher. Mm. Yeah, so this candle is pushing up as expected. This M15 candle is trading in this range, is going to fill this wick. They're going to continue up high above this resistance. All it needs to do is an M5 candle needs to close above this resistance for price to continue higher. Right, so yeah, we've closed right at the resistance. So the next, but there is no top wick. So this candle needs to pull down, create a bottom wick to go, because there is no top wick here. If there is no top wick, then price needs to pull down for liquidity to go higher. But if there is a top wick, then price generally can just trade straight through that wick, because that's the range to trades, right? So just keep that in mind. So there's a lot of bullish volume since here. Prices pushed up 76 pips. Yeah, so now we filled that wick, and we should continue high. Should continue higher above this, and then we should continue straight into this candle. Now, this candle, you're gonna pay attention to this candle right here. This M5 candle. Seventy 22 567. Fuck it, it's just too way too. $45 pips. $35 pips. 671. about 22 pips away from there. 70-12. Close 68-13. There is no information on that candle. There is absolutely no information on that candle. This stop loss is too wide for me, 38 pips. But this stop loss is 23 pips, 20, 22, 23 pips, which is kind of okay. So if price gets up here, I'm gonna maybe possibly look at an opportunity. Seven, two. Yeah. Yeah. So now the reason we had marked that high liquidity zone was because the price could easily break that, right? Could come up, take out that high, and continue up. But the reason we had marked that because it broke this demand here, right? So maybe a small reaction, maybe deeper here, maybe a small reaction. Or if there's a lot of volume, we go straight through and break that high. That's a flat top. That's the only reason I don't like this zone is because it's a flat top, and I hate flat tops and bottoms. I absolutely hate them. There's no wick there. There was a strong rejection wick there. Even though this is a clean M5 rejection, there's no top wick there. So price should react here to 26671. We should get a reaction, but we may go higher. We might get a reaction here and pull down 20 pips. This might go up here and come down 36 pips. Let's see. Yeah, this is 35 pips, and this kind of this doesn't make sense. That's okay. 34, 19, 19, 20 pips. This one. Okay, so 30 minutes for the candle to close. 30 minutes for this candle to close. I'm gonna wait for this. The next 15-minute candle should right off the bat, as soon as it opens, should break this current M15 high. It should break it right off the bat. So this candle closes in a minute and a half. The next one should break the high straight off the bat. Should break the high within the first 1 to 2 minutes or even first 3 minutes should break the high and continue up. So then we got to wait for that M15 candle to close. So maybe if it gets up here, then maybe possible small position, possible small position there. Yeah, 40 seconds for this candle to close. We should close above this resistance or close at it, and the next one should go break that high. We are reacting to this M5 candle, right? It came, touched this to the pip, the lighter red box, the pink box that I drew of that M5 candle. It's reacting right to that candle. That's the candle that started the push down. That's the one with the liquidity. Hopefully that's the one with the liquidity. If there is liquidity here, that's the M5 candle with the liquidity, and we reacted right to it. Now that's a huge candle and a massive stop loss. So I want to see if price gets deeper into it, because I'm not going to take a trade right at the edge of that candle, because that's too much of a stop loss, right? But we are reacting, we are pushing down. We've already pushed down 21 pips right at candle. So if there is a bearish volume in this red zone, it's in that M5 candle. It's all inside that M5 candle. But we didn't go deeper, and price just reacted to it already. Dropped 23 pips, could drop lower, could drop down to these wicks here. Yeah, could drop down to this wick here. Will be a 30 pip drop. Yeah, it's dropping down to that wick. Should go below that wick, and that's a 30 pip drop from that light red box that I drew. No, I can't take that trade. I wouldn't take that trade because of the stop loss. I'm not going to hold a 45 pip stop loss trade, There's no way. No way. Anything under 30 pips is good. Anything under 30 pips. That's 35, even that's too much. This is ideal. 20 pips. That's ideal. But there is a chance that if price consumes this volume here before it gets there, then when price does get there, it's very likely it's going to break right through, because it's already reacting to the volume in this candle, the M5 candle. This is the M5 candle to the left. That's that M5 candle. So if you look on the M5, that's that candle. So in that candle is volume. Bearish selling volume is in that candle, right? And that M5 candle consists of a few M1 candles. And if you go down to the M1, you'll see two to three. It's these two candles, right? It's those two candles. That's what caused the drop. Price tried to get back in, couldn't, continued. So it's ideally these two candles. So it's above this green area, above 2,666.50, right, which is about 35 pips. So it's above. It's in these two candles is the volume. These two M1 candles. Because price went up, closed down, tried to get back up, couldn't, fell all the way down, right? Yeah, so fell the price started falling here, tried, fell there, 150 pips, and now it's come back up there again. So yeah, this high is going to get taken out now because it's a very weak high there. M1 has no, it's a flat top again on M1. So that high is going to get taken out. Um, but price did drop quite a bit. 45 pips from that zone. Perfect. Just too much of a stop loss for me to take. So that was the ideal reaction. That was the exact reaction that I was expecting from that M5 candle. 45 pip drop. We could even drop further down. Could even drop here. Drop a total of about 60 pips, 55, 60 pips. Um, but unfortunately, it didn't come higher because I can't take a trade with a 45 pip stop loss. No way. No way. No way. No way. So that's so basically on the way up, which is wherever price turns, it could turn here, it could come down here, turn somewhere here. It's going to take out that top. It's going to take out these highs here because it's a flat top. So we are coming up. We're going to take that high. I'm going to go deeper now. If there is still volume left, then somewhere here I want to take a trade. So we broke one high here. And the next candle should break this high and go higher. Okay, just give me a few minutes. I'll be back. I'll be back in a few minutes. Got about 9 minutes for this candle to close. Sorry. Yeah, okay, so price grab liquidity, pushing up, taking out that M1 high as expected. Yeah, I took it out. We should continue pushing higher. 5 minutes more for this M15 candle to close. We should continue higher. We just grabbed liquidity. That was a 46 pip drop. So grab liquidity there. Just continuing high now. Yeah, this M5 candle closed above this resistance as well. So the next one should grab some liquidity and continue higher, which is this current candle. So either this current candle or the one after that grabs liquidity and continues high, because this M5 candle is closed above this resistance with a lot of bullish volume. Possibly coming down to grab more liquidity. Broke below this low, M5 no bottom wick. Wow. Yeah, this is the NYSE open. Yeah, NYSE open just about 10 minutes back. 12 minutes back. So this is the NYSE volume. But we should continue higher. We're closed above these resistant levels. We should continue higher. Just coming down to grab liquidity to move up. This was the NY move. It didn't come down to get us an entry. It just traded above this green box and continued up. And now this is the NYSE pullback to possibly go higher. A minute and a half for this candle to close. Came down. We need to see some sort of a M1 candle. Maybe its price is going to come lower, come back to this resistance, support, resistant turned, maybe it turns into support to go high. Okay, so 15-minute candle closed. um, yeah, just close below this. um, Possibly a liquidity grab, and now we continue. Yeah, so this M5 candle possibly closes here and then we continue higher. But I like to see a bottom wick for this M5 candle. So maybe the next one comes down, creates a bottom wick, or this current candle itself creates its a longer bottom wick tail for this, and then we go up. So I'm going to be here for another maybe until the H4 candle closes, and then I'm going to call it a day because there's a lot of bullish volume and I'm very reluctant to take a sell trade up here. Even if it's just a reaction trade, just a little bit of a pullback, I'm very reluctant to take it because price has reacted quite a bit to this light pink zone that I drew, or sorry, the dark pink zone that I drew, or the light red area that I drew. Based on that that zone is based on that M5 candle, liquidity candle, and price did react, drop 55 pips from that. So it's probably consumed the liquidity or the sell orders in that M5 candle. So now when it comes up for the second time, when it comes above these candles or comes here, it may not have a reaction like it already did. It may not have this kind of reaction. It might just have a smaller 15-20 pip reaction and just break right through it. That's very possible. So I've seen that happen before, so I'm kind of reluctant to take a trade up here, deeper in the zone. We are coming up now. Here we go. We're coming up. We broke above. M5 candle is about to close. M15 has broke above the previous high. There's no reason for it to now come down lower and break this low. We're going to just continue up here. I don't know. I'm not convinced if I should take a trade here or not. Because that line falls in line with rally base. There is no base, that's the problem. There is no base. If there was a base, I would have been a little more um, okay with taking a trade. I'm not convinced at all, but I would have been a little bit more okay with taking a trade if there was a base here. There was a rally, there was a base in candle somewhere in between these two, and then a drop. But there is no base. So it's a rally and a drop. So there is no base. There is no base means the price didn't pause for any. It didn't pause. It just went up, straight down, went up, and then straight down. It didn't pause to collect orders. It didn't pause for a minute or 2 or 5 minutes. It didn't pause at all. In the 5 minute also, there is nothing. That's just a liquidity candle there, and we did touch it, and we dropped 55 pips already. So that liquidity area was about 45 pips, and we dropped 55 pips. So that was a 1 RR trade if I had taken that, but that stop loss is way too big for me. Now we are reacting to it again. Again, flat top. So that's going to get taken out again on the way up. Just like this flat top was taken out, like this flat top was taken out, this flat top is going to get taken out again on the way up. It's probably pulling down to grab liquidity to go higher. And it's also consuming the orders in that zone before it gets deeper. So that's all the more reason to not kind of don't want to take a trade there, because see, we had a reaction here, we had a reaction again right at it here. Now we're having a third reaction, 40 pips. So 45 pips, 55, 54 pips for almost 40 pips. And all of these are happening right at the beginning of that rectangle. If they happened here in somewhere in the middle of it, I would have taken one of those trades. But they happened right at the base of it, creating a very big stop loss. Yeah, this happens. This happens. This is priced at all-time highs. It does a lot of weird things. Yeah, gotta wait for the 4-hour candle to close now. I'm not gonna do anything right now. I'm gonna wait for this 4-hour candle to close. The 4-hour candle is closing bullish. It's closing above this resistance level. Very likely gonna close above this resistance. And price could easily just continue to push up here. So not all, it's just more and more unlikely to take a trade here. 4-hour candle is closing now. It should close above this resistance here that we drew. The first one reacted to that resistance, then the second one also went above and reacted to the resistance. The third one is coming up, and third one should close either at that resistance or above it. It should close. So the next 5-minute candle. So, okay, this 5-minute candle should either close at the resistance, it'll come down for a bottom wick, should close at the resistance or should close above it. And if it closes above it, that means the 4-hour candle has closed above it, and then we are continuing higher. We are continuing higher. It's coming down for a bottom wick now, and then we should go up and close either at it. If it closes somewhere inside that gray area or above that gray area, anywhere above the gray area, then the next, that means the 4-hour candle is closed strong bullish, and the next one should break the high and continue higher. And then we already consumed this liquidity. That's what price was doing. It was not getting, it was not going deeper. It was just reacting to the base of that rectangle and just consuming all those orders so that the next one could maybe just trade right through it. Yeah, so we got the new 3 minutes more for the new 4-hour candle to close, for the new 4-hour candle to open. 3.5 minutes. This daily might close. Daily is very likely to close above the previous day's close, above 2650. And the next one, the next daily, maybe Thursday, we go further up to 2,700. Just pushing up. Previous week pushed up, clean push up. The week before that, massive push up. We had about 3 weeks of consolidation. I think this was in August, was it? Yeah, August. Yeah, all these 3 weeks were in kind of this, apart from this one, this was August and the first week of September. So that's the summer. That's basically that's like US summer. So it's nothing much happened there. Just kind of ranged. And then soon as summer was done, it's around the second week of September, around the 8th, 9th of September or 10th of September, summer is done, and then you have all of that volume coming in. $187 increase on gold since the end of the summer, the US summer. So that's when volume begins to kick in after the first week of September usually. So that's exactly when this candle started, and that's $187 move on gold. So it was trading at around 2,480 an ounce, and now it's trading at around 2,667 an ounce. It's $185 move. Okay, so minute for this candle to close. Let's look at the 5 minutes. Yeah, so we created a bottom wick, and now the candle could close either here or above here, and that means the H4 candle is also closing right here. So the next one should break. This is the H4 high. Should break the high, and we should continue higher. Once you break the high and continue higher, it's very risky to try to take a sell trade here. Very risky, because we have new volume in the 4-hour candle volume that can just push price up. Yeah, it was unfortunate that price didn't come to this green area for a buy trade, because this was the move that I was anticipating prior to New York Open. I was anticipating this move up 100, 150. I was actually anticipating a 170 pip move up, yeah, from here. That's when I was 170 pip move from this orange level here. 170 pip move, but price didn't get there, so it just continued up. So right, that's the 4-hour candle closed exactly as we anticipated, right at that resistance. Close right at the resistance. The next one so this candle should pull back and then should continue and break the high. So now we're going to just redraw this. I'm going to just redraw this zone. I'm just redraw this zone now. For those who want to, were learning to draw supply demand, then so price, this is the zone now. We have a rally, base, 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 and then the rally, rally, base, rally, right? 4 basing candles rally. So now if price does come here, we can take a trade 60-10, 60-10. Yeah, that open is 60-10 and this low is 51.21. My trading hours are done. I'm not going to be here for too long. I didn't get the buy opportunity that I was looking for, so I'm not going to kind of look for a trade now. Just get rid of all of that. Get rid of that. Get rid of that. Okay. And this low is 51.21. 51.01. Okay. Okay, so that's how you draw it. So we have a rally, we have 4 basing candles and a rally. Leg in, base, 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 4 basing candles and a leg out. Okay. So that's the new zone. Now you got to see if that's a high liquidity zone. Has it taken out anything on the left? It hasn't taken out anything on the left, but it is yeah, it hasn't taken out anything on the left, but it is freshly created demand, and price hasn't come to it. So just open 57.26, 57.26. Let's get rid of that. Let's get rid of that. Okay, that's what we got. So price could come here below this to go higher, or may just not, and may just continue higher, depending on if it already has enough liquidity to continue high and break this high. Then we could just do that, or we come down here right where the EMA is, maybe touch the EMA, and then we continue high, right? Because that is um, the smallest base of that, the tightest area of that supply of that demand zone. Sorry. So these are the 4 basing candles. So the demand zone is drawn based on the basing candles on the top of the body and to the lowest wick. So that's the lowest wick, and that is the body of the base, right? Those 2 candles there. So if there was either 1 or 2, it doesn't matter. That's the highest body and the lowest wick. Highest body to lowest wick is demand. Okay. Lowest body to highest wick for supply. So highest body to lowest wick for demand. So, and in that we have an area here where price can come to deeper here. But if it does get here, I want to again see that M15 I want to see M15 lows, two M15 lows to be taken out before price continues high. Okay, so that's about it. Um, Price is very likely going to just range here now for a while before it either continues high or low, because we've just opened the 4-hour candle has just opened. This was the move. This was the New York move that I couldn't get on. I couldn't get in because price didn't come deeper into my zone. This was the New York move. Now what we have is probably the NYSE move, and then we have the London close move, right? So I don't know if the NYSE move is just going to continue further up, or we're going to pull back and then continue, right? From what seems like price is just going to continue higher, right? We've grabbed liquidity here below this, so that's the M15 break, that's the M15 break, and now we just continue higher. That's very likely. Yeah, so we grab liquid. That's a came to this demand zone, drop base rally, came right there, and now we're continuing higher. So yeah, that's 34 pips, 18 pips, 34 pips, probably go higher, 38 pips. Um, yeah, it's broken, it's taken out two lows, right? It took out this low, it took out this low, and now we should go higher. Same like we did here. We took out this low, then the next low was here. As soon as this low was taken out, we went up 80 pips, 83 pips, right? So now we've taken out two lows again. So now we can comfortably go up all the way up another 80 pips, easy. Um, and the reason I say lows are taken out, because it's got to take out a minimum of two lows. That's what price usually does. It takes out a minimum of two M15 lows, and then we continue uh, in the direction that price, in the opposite direction. In the opposite direction. Once it takes out the lows, it takes out the lows on the opposite direction, and price moves in the opposite direction. So you can see soon as the lows were taken out, so here M15 one low was taken out, and now the second soon as it took out the next low, price is now pushing. That's enough liquidity for it to make the move up. Again, I know what's going to happen fairly, to a fair extent. I know what's going to happen, but that doesn't mean I have to trade these, because these are not, price is not at the extremes. These same things happen here at the extremes. That's when I want to get in on a trade. You can see soon as the second low was taken out, price now broke the high, and we are continuing higher, right? So these same this same play, the same setup, they happen everywhere. They happen in the middle of a zone, they happen in middle of supply demand, and they happen at the extremes, at high liquidity zones. I want to take the ones that happen at the high liquidity zones, not the ones that happen in the middle of two zones. Because again, the reason for that is that's where I get the low risk, high reward, high probability trade. That's the reason. This can be high risk, because once it's taken out, I don't know whether it's going to come down here. So that I'm going to have a bigger stop loss, right? So I don't know how far this is going to come. It could come down all the way to this green zone before going up, because that is the new demand area. That's where price has buy orders at. Right? Now we've gone up, we've broken that high. So just as we anticipated, once there were flat tops, flat top, flat top, and flat top, we're going to break those, right? And it broke that. Now we're going up there. Now here, we got a reaction right there. Yeah, but we broke the high. Yeah, we got to wait for this M15 candle to close. Let's see where this M15 candle closes. Gonna push up. Yeah, we're gonna, that top price is gonna take out that top. It's hardly any wick there. That is not it's not a rejection candle, so that's going to get taken out, and price is going to go deeper here to that 6825, 266,825. Might get a reaction here. I said this some time back. I said you could get a reaction at 266,671, and that's the reason I put this line there. So this is that reaction. So we did drop. Yeah, we did drop. That's a small reaction. Could have taken a trade there. Or the close partials. Partials would have closed if I had a pending order there. But let's wait. I'll be here for another 15 minutes. Let's see. Price pushes back up. 35 pips, 27 pips. Still, this stop loss is too much. 29, 30. This green line 266,671 is this. It's that supply zone there. Drop, base, and drop. Price couldn't fail to come back to this candle. Here, price failed to come back to this candle. So there, that's an important supply zone. Price dropped 66 pips there directly from that. So we could see a move down now, similar move down. We could see a move down here, very possible. A similar 60 pip drop from there. I just want to wait for this candle to close. Wait for this candle to close. 142 high 736 138. A minute and a half for the candle to close. That is a rejection on the M15. It's a wick on the M15, liquidity wick on the M15. Let's see if the candle closes up here and we get up here again. If we do, then I'll take a trade. I'll manage risk if this high breaks. But price needs to get back here to 266,587. 1543. It needs to get up there. $30, 34. Okay. Okay, let's see if we get up here. That's a wick there. That is the mid of the fib. There's also a drop there. Price needs to get up here at least. 46, 76. Yeah. I'll have to manage risk at the high of this. If I am trading this candle in 15 candle, then I have to manage risk at this high. That's still quite a bit of a big stop loss. I want price to get above. We are dropping. I want price to get. We are dropping from here, from the mid level of the fib, which is also supply rally base drop. Usually price ranges for about 30 to 45 minutes when the new 4-hour candle opens. So it's about 15 minutes since the 4-hour candle has opened. Maybe another 30 minutes we range. To get above here.  Price has to get above here for me to be interested. This is 30 pips. It's just borderline. $50. It's just ranging now, and we're probably going to drop straight down here. Tapped it twice. It's just price. Slowing down after this 80, 90, 100 pip move that it made. And then New York session, it's just kind of ranging now. It should come, yeah, we broke below the low. Probably going to continue down now. Seems like it's not meant to be today. Yep, just coming straight down. 30 pips come down to this. We're respecting that M5 high and we should push it, could push down. Just not meant to be today. I would have taken a trade if we broke the M5 high, because if you break this M5 high, you got a little cleaner space to this. So that would have been the right area to take the trade. 552. Yeah, that would be the right place to take the trade. Yeah, that's the right place. That's the right place to take the trade. $52. Almost there. Did we? Yeah. And one here. Um, why am I taking that? 22. 71. Close. 2667. 2667. And the stop loss is 22 pips. 22 pips. Let's see. We're just going to give this area just one chance, and then that's it. Uh, if we continue to go up here, I'm going to manage risk. If we get to this area, or maybe not, I might not manage risk. I've taken a very small position, a lot less than what I usually plan to lose for the day. Price is reacting to that area, so we should drop down. We should drop down. Maybe we just continue up because we consumed a lot of the orders from here already, so maybe we just continue up. We don't come down. Let's leave that. Yeah, we are pushing up. We're pushing up from this support. Price is trying to push up from this support. Higher. Where is the next resistance? You got resistance right there. Minor resistance right there. Got some minor resistance right there, but price is pushing higher. Yeah, we are pushing high from this support, resistant turn support now. Pushing high, so yeah, I'm gonna manage this trade. Don't wanna hold it. We get deeper here, then I'm gonna close partial positions here. Yeah, let's see. Break this high 643. We did come to that sniper. We did come there. We did come there. But as soon as you break this M5 high, I'm going to close 50% of my position. Because once you break that, we're going straight up. We're going to go straight up after that. Yeah, we're getting there. Okay, we closed 25%. Go up a little bit more, then I'll close another 25%. We've been here for almost 3 hours, 2 hours 47 minutes. Yeah, this is the 30-minute candle close. Close the bullish candle. Maybe this is the pullback to create the bottom wick to continue higher. That's fine. Just expecting a reaction here anyway, just a little bit of reaction. We're not expecting a reversal here. But we came back to that support and we are reacting to that. Hmm. So if an M5 candle doesn't close below this, right, then there is no reason to hold this trade. We are pushing up. Yeah, close another 25% there. We delete my pending order, and I'm gonna close the entire trade here. That's it. There is prices pushing up. They're pushing up from the support. There is no need to try to take a trade here. This is the other place price could go to. It did touch that. Yeah, we are pushing up, so M30 is closing above. Yeah, there is no need to try to take a sell trade here. So 0.1% loss, 0.1. Well, that's fine. There's no opportunity. Okay, so that's going to be the end of the session. Okay, we're not going to try to do anything else. It's going to be the end of the session. Be back tomorrow and do the same thing, same setups again tomorrow. Same setups, same analysis. All right. Okay. See you guys tomorrow. That'll be the end of the session. Thank you for watching.